So welcome everyone to another exciting class. Today, our goal is to give you an overview, not to go into too much detail, but we're excited, meaning Tony Marino is branch manager now of Guild Mortgage in Naperville, and myself as the business development manager of Guild Mortgage are very excited to bring to you an overview of some of the new programs that we didn't have available to us under First Centennial. And we think as realtors, you're going to enjoy knowing more about them. Again, it's an overview. We will go into greater detail in future classes, but I wanted to kind of give you, the plethora of some of the new programs. I also want to bring in HomeBot, which is going to become available to you free of charge through Guild Mortgage through Tony Marino. And we're also going to talk a little bit about Listing Booster, which again, you can use to either help advertise other agents' listings, your listings, or even help market for sale by owners. But again, we'll go into that toward the tail end of this. Right now, the announcement is that First Centennial has merged with Guild Mortgage, and they're out of San Diego. They are licensed in 49 states. So again, if you feel like you need help with clients that might be mobile, moving to other states, most likely Guild is going to have a lending office in that state. Tony Marino is licensed in Illinois. He is licensed in Florida, a popular destination for those that are retiring and moving out of Illinois. And he's also licensed in Colorado, another popular destination for those that might be moving. So again, Guild Mortgage, we're excited because they bring to us a bigger platform of loan products and resources for realtors. Like I said, we'll talk about HomeBot a little bit. We'll talk about Listing Booster, both of which are coming to you free of charge and should be helpful in your business. So let's start from the beginning here. Melinda, give me a thumbs up. You can see my screen, I take it. Home buyer protection. All right. So home buyer protection is a package, a bundle of products that we can use to help any home buyer purchase their single family residence. It comes with a lock and shop where they can lock in their interest rate for 120 days. If the rates go up, obviously there's no change in the rate. The key here is, which we didn't have before, is if rates go down, they have an automatic one-time float down. So now as they get closer to closing, rates are starting to drop, starting to get lower, they can lock in the lower rate free of charge. It comes with a credit approval protection. They can shop with confidence. They can, we being Guild stand behind our credit approvals, and they pay up to $5,000 in earnest money and $1,000 in inspection and appraisal fees if we can't close your loan on time due to Guild's error. It also comes with a Home Buyer Express. It's a 17-day closing guarantee. You have confidence that you'll close your loan on time. With this guarantee, Guild pays $500 toward closing costs if the loan doesn't close on time due solely to Guild's delay. Lastly, payment protection program. With the payment protection program, you don't have to wait for interest rates to come down. So again, if you as realtors are talking to clients and saying, these rates, the payments are slightly higher than what you might have been accustomed to when they were 3%. But the key here is with our team, meaning the Guild Mortgage team that would be part of your marketing out there, they are allowed to refinance with no lender charges as long as they made 6 monthly payments on time. So if they make 6 monthly payments on time, then Guild will refinance them when rates come down with no lender closing costs. Again, just to reiterate, lock and shop, 120-day lock-in. They pay a $1,500 upfront fee toward the closing costs at the time of funding. So it will get applied, but if they're going to lock in for 120 days, Guild wants $1,500, and then they'll apply it toward the closing costs at the closing. It can be used on conventional FHA or VA loans. They must find a property within the first 90 days of the lock, and then there is a one-time float down that's available to them. Kind of an exciting program. We already talked about this here, the secure credit approval. If we've issued preliminary underwriting credit approval and then we're unable to close the loan, we'll pay the borrower up to $1,000 for inspections, appraisals, and relocation expenses if they're incurred and the transaction does not close. They will also reimburse $5,000 toward the earnest money. The 17-day closing guarantee, the borrower must qualify for credit approval prior to executing the purchase and sales agreement. What that means is in essence, on a TBD basis, to be determined. All of our clients initially as prospects are TBDs, to be determined. They go through credit approval. It takes about 7 days. So now they've got their credit underwritten, their income, their assets, and they get a credit approval. Then what they do is they execute a purchase contract, and it must be provided, must be sent in within 72 hours of execution. Then all the additional documentation that is asked for, required by the loan officer, by underwriting, must be submitted within 2 business days, and the loan must be locked in within 15. If all these are met, you'll be closing in 17 days. I mean, to me, just looking as a salesperson, I'd be doing a lot of my clients on this basis. If I don't have a contract yet, hey, get yourself not only pre-approved, but get yourself credit approved. Get yourself totally underwritten such that then all we got to really do is insert a contract, and we have to go, we then have to get it appraised, and we go to closing within 17 days. Kind of a cool way to do your business. Payment protection, we talked about this, that Guild will waive any lender fees on a refinance as long as they've made 6 monthly payments on time. Let's talk about this kind of cool program, 1% down payment advantage. It's designed to help more customers obtain home ownership in today's market. 1% down. The customer only comes up with 1% down. It's really a 3% down program, but 1% is from the customer's money or funds. And then 2% is a Guild assistance, down payment assistance up to $5,000. So Guild will provide 2% grant. A grant means that it is not repayable. So kind of cool. 1% of their own funds, 2% non-repayable. Then the payment advantage on the conventional 1-year lender paid temporary buy down, where Guild pays 1% of the customer's interest rate for the first year. So what does that mean? That means that if the rate is 7%, Guild will pay 1%. So the customer's really only paying 6%. So they're paying 1% as their own money for down payment. 2% Guild gives them as down payment assistance. Guild pays 1% of the interest rate in the first year. And there's payment protection, because they can take advantage of the benefits of being able to refinance with no lender fees in the future if rates drop. So once again, I, as a realtor, I'd be going out and saying, hey, we can get you into housing with 1% down. I got down payment assistance. The lender's going to pay, buy down your interest rate, and you get to refinance with no lender fees in the future if you make 6 monthly payments on time. So this is what they call a home ready or home possible borrowers. It is a 3% down program, with them only coming up with 1% of their own funds. 80%, the income limitation is 80% of the average minimum median income limitation. That, quite honestly, should not deter. Most people are going to meet that requirement. But again, we have what's called a lookup tool. You give Tony the borrower's information, and he can look up to tell you what the AMI is for any particular county or city. And you can use the IDA down payment assistance program. If you don't want to use the Guild's 2% up to $5,000, if you want more down payment assistance, which most of you know, IDA provides $6,000, $7,500, and $10,000. So if you want to use the IDA down payment assistance program for more down payment, for more money to be available for closing costs, you can do that with this 1% down program. And by the way, I am going to give you a copy of these slides so that you don't have to remember all this by memory or take copious notes. Next one is the 3-2-1 Home Plus program. This is really kind of cool. Now with this is as little as 3% down. Okay, so it's another 3% down program. Your client receives the two, so it's 3% down. The two represents $2,000 in an e-gift card to the Home Depot. Kind of cool. You as a realtor, you can be now saying to your clients, not only can I get you into a really great loan program, but I can also give you $2,000 in a Home Depot card that doesn't have an expiration date on it. And they'll get anywhere from $500 to $1,500 in closing costs, or it can be used for down payment. So again, eligibility requirements, it's a conventional financing with 3% down, first-time home buyers only, 620 credit score, is low as 620, single family, condos, manufactured homes, pre-purchase counseling is required and income limitations apply. Again, that same 80% of AMI, the average median income as foretold by HUD for qualifying income. So again, depending upon the amount of their income, they'll either get $500 or up to $1,500 toward closing costs. You can use IDA for down payment assistance for that 3% down. As you all know, if you use IDA, which is the Illinois Housing Development Authority, 1% has to come from their own funds. The other 2% can come from IDA. And get a load of this. Put your thinking cap on. This came to me as I was preparing for this. I go, what if you were a realtor and you could set up a stand or a table in a Home Depot and hand out flyers saying, here, if you or someone you know is in the market to purchase a home, I can provide them with a $2,000 Home Depot gift card. Yeah, obviously the store manager has to approve you being there and setting up a table and handing out flyers in his store. But to me, it'd be worth the ask. I might want to go there and say, hey, do you mind if I show up on Mondays or on Saturdays or on Sundays, and I'm able to hand out flyers to everybody that is coming and going. So just food for thought. Okay, reach more buyers, temporary buy downs. We never had this many buy downs before. Buy downs mean if the interest rate is 7, if you do what's called a 3-2-1 buy down, that means that your first year interest rate is not 7, it's 3% less in the first year. So 3 from 7, your interest rate is 4%. Then 3-2-1 in the second year, it's 2% less. So not 7, it's 5. In the third year of a 3-2-1, it's 1% less, or instead of 7, it's 6. So you're going 4, 5, 6% before it then kicks into the 7% for the remainder. So again, very, very cool. We do have anywhere from 1-0 buy downs, 1-1 buy downs, 2-1 buy downs, 3-2-1 buy downs. And the great thing was before the seller had to pay the buy downs, now it's a combination of the lender, the seller, or the buyer can all contribute to what the buy down cost is. And again, I'm just giving you again food for thought on stuff that we already did. What if you can get your income, assets, and credit approved for your client, for your prospect? Get it approved in 7 days on a TBD basis. Go find a home, insert the contract, get the appraisal done, and close fast. Close within that 17 days. I think that's just outstanding. If I was a realtor, I'd be operating every one of my clients that was a prospect. I'd be putting them on a get yourself credit approved within 7 days. And here's another food for thought for you guys. And what if you went to the MLS? To me, this would be my homework assignment. If I was a manager of a realty office, I'd be asking my client, my agents, would you go to the MLS? Would you find a 2 to 4 unit property? Research the market rents that could be put into that 2 to 4 unit. I'd give that information to Tony Marino and I'd say, give me a printout. Show me the net mortgage payment that my client would actually be paying when you offset the rents in the other units that my client would potentially not be living in. Create a co-branded flyer and send it out to all your prospects. Find out who wants to stop renting? Because what would they really be rate sensitive if the payment, the net payment, was about what they were paying in monthly rent? And that's what happens in these 2, 3, and 4 units. And more importantly, what do you guys know about IDA again, the Illinois Housing Development Authority down payment assistance? They give you that 6,000, 7,500, and 10,000 on 1 and 2 unit properties. Tony can show you how little. If you go with a 2 unit, you find a 2 unit, send it over to Tony, tell him what the second unit could rent for. He'll run you all the numbers. He'll show you how little, if they get up to say $10,000 in down payment assistance from IDA, that would get so many renters into housing, and their net payment would be about what they're paying in rent. So you kind of like, do you still want to rent, or would you like to get into the real estate market? And remember, they only have to stay in the real estate for up to 1 year. Then they can pull themselves out, put a tenant in there. Now they got their first investment property with tenants in there, and now they can go out and buy their single family if rates have come down, or they can go out and buy another 2 to 4 unit property with your help. So anyway, when you get this handout, I put the link here of last month's educational video on 2 to 4 unit properties. So take advantage of that education, take a look at how low the payment can be, and start talking payments versus interest rates, and seeing if you can convert some people that are saying, I just can't buy right now. The rates are too high. I'm going to be a renter, or I am a renter. But how about when the lease is up, maybe you want to put them into a 2 to 4 unit property. Food for thought. Okay, bridge loans, next product. Your borrowers can make now a non-contingent offer on their dream home. So what does that mean? Their current home isn't sold yet. They want to make a non-contingent offer, that it's not contingent on the sale of their existing home. So they can get loans of anywhere from $40,000 to $300,000. The bridge loan must be on their current residence, the one that they're going to be selling. The bridge loan must be repaid within 6 months. The credit score has to start at 720. Their max DTI is 50%, debt to income ratio, and they can go up to 80% loan to value on their current home that they'll be selling. So Guild will provide them with this bridge loan that then they can use as the down payment on the home that you're selling, that you want them to buy. And it'll be, obviously the bridge loan will be put on the home that they're currently living in. Again, very cool stuff, because we did not have that before. Now we can get more people to make offers on a non-contingent basis because we got bridge loans. Doctor loans. Everybody goes to the doctor at some point in time. Everybody should go there with a flyer in their hand, because now you can do 100% financing. Get a load of this, no mortgage insurance. You as realtors know that anytime somebody doesn't put at least 20% down, you got to have private mortgage insurance, right? Well, not on this program. The eligible borrowers include medical doctors who have a minimum of an MD, DO, DDS, DMD, or maybe they're a brand new doctor. They just have an employment contract. Great. Send us the employment contract. Let's see what their salary is, and if we can't get them financing at 100%. Medical doctors include dentists, podiatrists, ophthalmologists. They're permitted. Veterinarians are permitted. Loan amounts up to $2 million. Sounds pretty good to me. Credit scores as low as 680. Student loan debt based on family size and income must be included, and debt to income up to 50%. Now here's again, another just wild marketing thought on my part. Have you thought of becoming a member of Serving Your Community Matters? That's something that we at Guild, formerly First Centennial, have for you. It's free of charge. We create all the marketing material for you. It comes with a plastic stand that you can put into doctors' offices, police, firemen, etc. How about dropping off flyers at the doctor's office, letting them know that you can provide the doctors with 100% financing on their next residence? Guild Mortgage pays for the appraisal under the Serving Your Community Matters. Guild pays for the appraisal. Why not get a flyer like that? 100% financing, and Guild pays for the appraisal. And the realtor has the opportunity, it's not a must, but it's an opportunity for you to give a percentage of your commission. Some do 5%, some do 10, some I've seen do as much as 25%. Some do nothing. That's what I'm saying. There's no obligation on the realtor's part to give any percentage of your commission back under the program. But it is very important to know that you got doctor loans, 100% financing, and Guild pays for the appraisal. Sounds like a winner to me. And all you got to do is get a co-branded flyer on any of these programs. By the way, I'm going to be sending out a checklist for you after this class, and you'll be able to check off which ones you want co-branded flyers that you can start handing out to potential offices or clients of yours. Buy Now Advantage program. Gilmore, the Buy Now Advantage program strengthens home buyers' offer to compete with an all-cash offer by being able to write a cash offer with no financing contingency, okay, no financing, nor any appraisal contingency. So if the financing is not in place by the escrow date, Guild Mortgage will guarantee to pay cash for the home and provide the final permanent financing to the home buyer. So this involves credit scores of 680, conventional financing only, not FHA. Full credit approval is required, and the underwriting guidelines must be met. The down payment must be deposited into an escrow 2 business days before the close of escrow. If the home appraises for less than the purchase price, the home buyer will pay the difference. They can use it on 1 to 4 family units, including PUDs. Those are townhouses. No condos. Property cannot be tenant occupied upon closing unless it's an investment property. And the property must meet underwriting guidelines, and for sale by owner options are available. What this basically is, there's a committee that will underwrite the property. So it's going to take about 3 to 4 days for them to underwrite the property, and they will give you a written certificate that they guarantee that to buy this property if financing is not in place by the closing date. And then after the financing finally gets in place, then Guild will then turn around and sell it to the home buyer. But again, they can go out there, make an all cash offer and no financing contingency and no appraisal contingency. 0 down. Who doesn't want that, right? But first off, doctors, they get 100% financing. Veterans get 100%. But how about this? Guild, check out Guild's National 0 Down Payment Program. They pair an FHA first mortgage, which most of you know is 96.5% of the purchase price, and Guild provides them with a 3.5% or a 5% repayable second mortgage. So you got a first and a second on an FHA loan. And now remember the other programs that we looked at, those 3% down programs, those said that the income had to be 80% of AMI, the average median income. Look at this, the average median income, the AMI limits are at 135%. Not 80, not 100, 135% of AMI. Oh my God, that to me means we can get a lot of people into homes with an FHA and a second, helping more customers get into homes. It must be a primary residence. The credit score goes down to as low as 620, and the second lien, is repayable, like I mentioned. So you'll have a repayment on a first, you'll have a repayment on a second. Unlike IDA, remember IDA, their programs, 2 out of the 3 are non-repayable. The 6,000 and the 7,500, they're not repayable until you sell the house. Well, the $10,000 one under IDA, does require principal only of $83.33. Unlike that, this second lien will have principal and interest that has to be paid back. But if they qualify, they can get into housing with 0 down. Kind of cool. Reverse mortgages, I just want to touch on it in the sense that I've done many a reverse mortgage in my lifetime, and you can get into these 55 and over communities. Some people are selling their home, say a brick bungalow in Chicago. They get $300,000 in proceeds out of it. If they're buying, say, a $400,000 home in a 55 and over community, they need to put, say, 50% down, $200,000 of their own funds. They can get a reverse mortgage for the other $200,000. to purchase their 55 and over community home. So if anybody's interested in that strategy, let me know. I'm going to be doing another class down the road in greater detail on it. But 200 of their own funds, 200 in a reverse mortgage. As you guys know, the reverse mortgage has no monthly payment until they pass from this earth. So they're in that 55 and over community for the rest of their lives with no monthly mortgage payment. Kind of cool. Here's something that you guys might want to put into your MLS listing: helping sellers list and sell. Lock now and sell. The sellers list their home with you. They lock in an interest rate for their potential home buyers. So they lock in a rate sheet. The buyer can purchase their home with this locked rate. If the rates go up, the rate's secure because it's locked in. If rates go down, say one of your customers locks in a rate sheet, for 120 days, and rates go down from 7% to 5%. Great. The buyer of their home gets 5%. They get the float down. They get today's rate, not the rate that was locked in some 30, 60, 90 days ago. So again, lock now and sell, kind of a cool thing for you guys to be talking about to your potential listings, saying, would you like to have my team talk to you more about locking in an interest rate to protect yourself from rates going even higher? And if rates go lower, no harm. Your client, the buyer, is going to get the lower rate. So a great little tool for you to be advertising in your MLS. How about this one? Bundle energy efficient appliances. It's called the Green Smart Advantage program. It's for those that are doing FHA 203K loans, which again is a fancy term for a renovation loan. Somebody looks at a home and says, great home, love the location, school district is beautiful for my children, but it needs a refresh. Well, the borrower can purchase their new home and include the cost of energy efficient appliances. They can put in a refrigerator into the loan, a washer, a dryer, a dishwasher, and smart thermostats. Pretty cool. Before they were thinking, oh, I got to buy the home, we'll fix it up. But then I got to have reserves. I got to have money for my, for that dishwasher, for that washer dryer, for that smart thermostat. Nope. You can tell them, I can put all of that into your 203K loan and get you 96.5% of the purchase price of those items included in the loan. The Guild Advantage, again, it's a fancy term for their down payment assistance programs. You guys in Illinois know that there's the IDA program, $6,000, $7,500, and $10,000. If somebody needs more information, please contact Tony. I'll be giving you his contact information at the end here. Let's see if we've talked about all these programs. We've talked about conventional down to 620. There's little as 3% down. FHA, get a load of this, guys. Down to 540 in a credit score, 540. Now, again, remember this. They'll go down to 540, but if you go below 580, they're going to require 10% down. VA loans, credit scores down to 540. A lot of lenders only go down to 620. 540 on your VA loans, 100% financing. USDA, for those that are out, in the rural areas, down to 540, 100% financing. We went through the niche program, the 1% down, the 321, the bridge loans, the buy now, complete rate. Complete rate is a fancy term for if your client has no credit score, just never took credit out. How are we going to, we will approve them. We will, if they provide us with what's called non-traditional credit, we will then underwrite the file and give them a credit approval on. So if somebody has no credit scores, they can still move forward buying a home. We talked about the doctor program. We talked about the 3% borrower smart. We talked about the Green Smart program, putting the appliances in their ITIN. Not every customer that you meet is going to have a social security number. They might have an ITIN number, an identification, tax identification number. Individual tax identification number. Now you can do that with Guild. So if they don't have a social, but they have an ITIN, bring them on in. We'll get them approved. Lock and shop, we talked about. Lock now and sell for sellers. One-time close. If somebody is looking for a construction loan, we can now do construction loans. One-time close. They'll get 12 months of interest only on a construction loan, and then it converts into an end loan the remaining 29 years. We talked about payment advantage. We talked about renovation loans, could be the FHA 203K or the what's called the home style from Fannie Mae. We talked about reverses. We talked about the temporary buy downs and the zero down program. I'm just going to quickly touch on some builder. If anybody gets involved with builders, there's some really cool things for builders. The Strong Smart program, our exclusive program, allows the builder to pay for the borrower's mortgage interest for up to the first 6 months. So if they want to advertise, if they're looking to try and move inventory, if they're trying to attract buyers to their subdivision, they can advertise that they can pay for the first 6 months of interest on a customer's purchase from them, which means they're paying principal only. And as we all know, in a 30-year mortgage, majority of the payment is interest in the first several years, let alone the first 6 months. So they're in essence paying the first 6 months of interest. There's temporary buy downs. Get a load of this, the builder forward commitments allows a builder to buy a block of money associated with a 1 day's rate sheet. So today's rate sheet, they could lock in. Plus, they can also buy down the rate for those potential buyers purchasing in their development, potentially offer a below market rate. So again, if somebody was working with a builder and their builder's afraid of future rate increases from the Fed, they go, I'd like to lock in today's rate sheet. And they can use that rate sheet to then say, okay, it says 7%, but I want to buy down the rate to 6% for anybody who comes in the next 30 days. They can do that. Extended rate lock designed to secure loans for borrowers and builders with long-term locks while the home is being built for up to 360 days. So they can secure loans for the borrower and the builders with long-term 360-day lock-ins. Kind of cool. For conventional FHA, VA options are available. We talked about the lock now and sell. Builders have the ability to lock in an interest rate for up to 5 units within a development to help move their completed inventory. And kind of that's the overview of a lot. I know I'm feeding you with a fire hose, but I just want to give you 2 other things that I'm going to ask that, if you want to take advantage of. And one is called the HomeBot program, which will be a closing gift that you can give out to clients. We're going to be giving it out to clients. The HomeBot, again, if you've got you could give it out to your prospects, to your leads, or you can give it out to your closed loans. All you got to do is upload them into the system. We'll give you a free HomeBot account. It basically does 2 things. It gives them the home buyer digest, and it gives them the buyer's report. The home buyer's digest offers your client a look-see at what the value of their home is while they track the equity, market changes, selling temperature, and discovers opportunity to save or build wealth. So again, we're going to give you a deep dive into this later, but it's kind of cool that on a monthly basis, you're giving your customer an update. The system, you got to just upload your leads in there, and the system will give them an update as to what's going on with their value, their equity, with sales in their area. And then the buyer's report, it's an easy and fun investor-grade tool for renters, new clients, and investors. It allows your prospects to better understand and compare their market of interest, request pre-quals, start searching for homes, all of which can be tracked in their monthly buyer's report. And again, it's going to tell them where they currently are, say $1,370,000 on their current home. They're going to say, what are you looking to do in the future? Are you looking for Airbnb potential? Are you looking for a desirable neighborhood? Are you looking for the right timing? Are you looking for a return on investment? And it's going to give them not only what their home is worth, but it's going to start to show them, what they could do on a refinance, or if they're thinking of selling. Um, they're going to tell them what their purchasing power could be on a new home. It's very powerful. It keeps you in front of them on a monthly basis. Again, the tool is free of charge. Last but not least, I want you to take a look at Listing Booster. And again, Listing Booster is a lot like those who had agent marketing accounts. This is now the upgraded version of agent marketing called Listing Booster. And again, I'll go into greater detail of future class, but I just want you to know that many people go to MoveTube from the comfort of their couch, comfort of their home, and all of your listings, again, it's free to you guys. It links your MLS to this. Every time you do a listing, it's going to show up in MoveTube. I had one, by the way, I had one client who regularly, realtors like shiny cars. So they go through car washes a lot. And so they're waiting for their car to come out, and they saw the manager of this one car wash and said, "Hey, can you give me an idea how many cars come through here on a daily, weekly basis?" The guy says, "Yeah, we get about anywhere from 3,000, 4,000 cars a day." He goes, "That many?" Because would you mind if at my cost I bought a flat screen TV, installed it in the waiting room while people are waiting for their car to come through, and I put a Roku stick on it, and I ran MoveTube in the waiting room? The guy said, "It's no cost to me. All you're going to do is tie into my Wi-Fi." He says, "Yep." So in that guy's car wash, guy said, "In fact, I have 5 car washes." He said, "You can put them up in all 5 of my car washes." So this realtor has got a flat screen TV with a Roku stick, running MoveTube with all of his listings all day long, 24/7, while this guy's car wash is open. So again, free to you guys if you guys want to do this. It has listing trailers, flyers. It's going to have what I called sign writers before. I love sign writers because again, as people drive up to your listings or through the neighborhood, they see text this number to that number, and they're going to see all of the benefits because it does create a property website for your listing. One of the things I would use this for if I was a brand new realtor, so for those that are newbies or don't have a lot of listings, I'd be using Listing Booster to advertise other agents' listings. All you got to do is get A, their permission, and B, get their MLS number. The system will create a property website for you. You can get text messages or sign writers. You can do social postings of this listing. You can do open houses with this in open house flyers. So again, you can do video walkthroughs, virtual tours come with this, digital business cards with QR codes. There is so much to go through, which we will at a later date. So I've overwhelmed you. My purpose was to give you an overview on loan programs. Welcome to Guild. Look at HomeBot. Look at Listing Booster. I'll send you out a checklist. Let's have discussions. Let's have coffees with Tony. Let's get into the weeds. Let's look at some of these programs in greater detail. How can they better help you move your business forward? So, any questions? I see a couple in the chat. Let's take a look at what the chat has to say. How about a doctor of pharmacy? Melinda, I would just ask, can you send over what the what their credentials are? I mean, I'll find out for you. I mean, are they an MD? Are they what are they MPH? I don't know what kind of a doctor they are, but by all means, we can find out for you. And then the other one is, how about other frontliners? Anything for them now? Well, a couple of things in that respect. One, for the frontliners. I assume like you're talking about, say, some of the nurses or say some of the people, that check people in at doctors' offices. You won't be able to go under the doctor's program because they're not doctors. You won't get 100% financing. What you can do is the 0 down. You can use the 1%. You can use the 3-2-1. There's all sorts of different programs for them. But go back to the serving my community matters. that is your program. You can tailor it. If you wanted to say, I want uh, office personnel in a doctor's office to be in my Serving Your Community Matters program, Tony can go to management and guild and say, we want to expand it beyond policemen, firemen, teachers, military, doctors, nurses, and EMTs. We want to include however you call those people that are attending to people in doctors' offices. If they say that they'll pay for the appraisal, then you can advertise on your flyer that it's not just those 6, it's you got a 7th program or a 7th type of person that falls under Serving Your Community Matters, and that they will get their appraisal paid for, and you can decide whether or not you're going to give a rebate check as part of your commission. So yeah, let me know a little bit more about who those frontliners are, what they're called, and Tony will go back to management and see if they can't be included in your Serving Your Community Matters program. Anyone else with comments, questions? If not, you guys have been great. Thanks for being here today. I look forward to sending you out the replay on this, plus the handouts and links to some of these great marketing resources that's going to help grow your business. Everybody have a great day, and thanks for being here.
Glen,
Yes.
can I speak to you for a minute? Should
Yes.
I put Tony Marino at guildmortgage.net now?
Oh,
Because I have a client.
Yes. Thank you for saying that.
Wait for a while.
I forgot to tell you what Tony's contact information is.
Wait for a while.
Do you see this right here? Says Tony's phone is 8478. You got the phone, but now his email is Tony with a dot, and then it's Marino at guildmortgage.net. Don't confuse it. So many people need to go on .com, and then they go, "Hey Tony, did you get my email?" And he goes, "Nope." So it's Tony.Marino at guildmortgage.net. Still same location, 651 North Washington in Naperville. But that's how you're going to get a hold of them. Phone number or email. And yeah, this is some exciting things. I know I fed you with the fire hose, so take the printout that I'm going to email to all of you, print it out, and slowly go through it. And then look at the checklist I'm going to send you and start saying, you know what? I do want a co-branded flyer on this, and this. Nope, not on that, and that. And then, ask Tony if you want a deeper dive on Listing Booster, or if you want a deeper dive on HomeBot, which again, we'll have future classes on, but if you want it now, we can provide it to you. You can start playing around with them because both of those are free to you. All right? Any other questions?
Okay.
Thanks, Melinda.
I'm using the co-branded flyers with the Philippine Nurses Association of Illinois because it's a very big group, and I've been getting businesses from them.
Oh my God, absolutely. Because nurses are automatically included in the Serving Your Community Matters.
Yes.
So
but then you said it's only for you just put in the doctor, so I don't really know now.
Well, but again, you remember this, that's just for the 100% financing. The nurses would still get, they can still use that. Maybe they qualify for that zero down program. They don't qualify for the doctor's program. But remember that one of the last programs I was looking at here, let's go back over here. If you go to the zero down program, here it is. Your nurses can still look at getting an FHA first mortgage at 96.5% and looking at getting a it's like getting 100% financing. It's not going to be called the doctor's loan program, but they could do 3.5% or 5.5% if they want to put 5% as a second mortgage. Me personally, I'd probably do the FHA first because it's going to be a lower rate. Your second mortgages are always at a higher rate, but do 96.5% first, 3.5% second. And remember, the income is at 135% of AMI. That web is going to catch a lot of people, Melinda. So this could be theirs. They could do 1%, maybe they don't want to do 100%. They got some money. Maybe they want to do 1% down with down payment assistance. Maybe they want to do 3% down with a 97%. So they can pick and choose. And the cool thing is, Tony's got what's called a scenario builder, where he can compare one program, say the first, 96.5% and a 3.5% second. He can then do one with a 1% down program with a guild down payment assistance. You can do another one with 3% down. And so he can show all three of those on one sheet, what the payments are going to be, and he can show what the closing costs, like a good faith estimate, a loan estimate, would be for each of those programs. So yeah, when you're out there talking to these people, let them know that that you have multiple programs and that you can show them different options now, and they can pick and choose. They can go, well, it's nice I can do 0 down, but I do have some money. I'd rather not have a higher monthly mortgage payment. I'd like to go 1% down, or I'd like to go 3% down with my own funds and get a lower payment. So yeah, take advantage of I call it loan comparison, scenario builder. Do a loan comparison for your clients. And that's something all you gotta do is ask Tony, say, Tony, do a loan comparison for me of a couple of different programs that my clients might qualify for. That help you, Melinda?
Okay.
I think you're in a great spot. If you got that Filipino nurses program, keep handing out your flyer about serving my community matters. Get their appraisals paid for. Give them different loan programs, 0 down, 1% down. Get them, they're going to love it. Any other questions? If not, I'll once again sign off by saying thanks for being here today, and we look forward to bringing you more detail in the next several weeks. Have a great day, everyone.